As a retiree, are you worried about the world? And are you worried about your money? If so, listen to this episode of 50 Shades of Money. Jim, right now, many retirees are worried about the stock market. And it could be for several reasons. One, the stock market has reached record highs and it continues to do so. But at the same time, there's so many things right now that could happen in the world. And what we want to do is talk about some of these risks that could happen to a portfolio and drag down what a retiree has saved. And we think there's many, many risks that could harm the portfolio basically through a market crash. So maybe you could start with what are just some of the big risks that are out there right now that could really affect a retiree's monies?
Well, there's a ton of risk, as you and I know, but I'll give you just a few of them. What about the North Korea situation right now? What happens if that escalates? The Syrian war, what happens if that gets out of control? What about Russia and the relationship we have, and can it get even worse as time goes on? What about terrorism? What about a cyber attack here in the United States of America? There's a lot of things, and I'm sure you have others as well, Dan.
Well, there's so many things. You name some that are really, I think, on the tips of people's emotions, a raw part of the emotions. We're worried about these things that we can't control, especially when it comes to war in these other countries. Very tough. But you also look at things mathematically, that in March of this year, more New York Stock Exchange stocks had actually hit their 52-week lows rather than their highs. The market's at all-time high. How in the heck are more than 50% of the companies hitting lows? It's because they're not really doing well and the market potentially is inflated. You look at an inflated stock market right now with price to earnings ratios double where they should be. That means at some point we're going to have a correction, and the correction means people are going to lose money in the market. So again, we have to make sure we're aware of these things. What else is going on out there, Jim?
Well, you know, in the olden days when you valued a stock, you looked at its earnings, its revenue forecast, the management team, and the product that they were offering. Well, today it's no different, right? There's no difference because that's what we're actually buying. But we're talking about things that have nothing to do with the stock market that now could crash the market, unlike maybe 30 or 40 years ago when we first started investing in the stock market. But we have trillions of dollars of euro debt right now that is 90 days past due. And that means this stuff, if it defaults, these are actual bonds that are owned inside of portfolios that clients own today through mutual funds. They don't understand this level of risk. The current bull market right now is 9 years in running. Come this October, every several years, on an average, going back to 1929, we have a major market crash of 39.5% or greater. And again, we're in this major bull run right now. People become oblivious to what could happen. Computer trading right now controls the market, Dan, and you better have the sense of knowing what's going on. You just can't let your money sit out there at that level of risk. And are there anything else that you know, Dan, that could possibly crash the market, or crash the client's portfolio, I should say?
Yeah, you know, there's several things, Jim. One of them is people don't realize that 50% of S&P 500 companies' earnings come from foreign countries. If we have any type of trade war, if we build this wall, what's going to happen to the dollars that usually flow over into the United States? Other risks now, Jim, outside is, one, the stock market by traditional measures is significantly overvalued. You look at price to earnings ratios, as we discussed, but you look at something else created by Robert Shiller called the CAPE ratio, the cyclically adjusted price to earnings ratio that truly looks at what would potentially happen over the next 10 years in the stock market. Right now, we're double where we should be, which actually comes out showing that mathematically over the next 10 years you should expect a 0% rate of return based on potential losses that have to be recovered over the next 10 years. So it's pretty amazing. You look at China's financial condition, not good. You look at Japan cutting their GDP numbers significantly by about 40%. And then you look at things such as pension funds flailing and failing, very, very, very difficult. One of the things that drove the stock market, this bull run for the last 8-9 years now, has been the fact that we've had almost 0% interest rates. We have quantitative easing by the government. We can't keep interest rates at zero, and the government can't keep printing money or making it so easy forever. That's driven the stock market, along with companies buying back record numbers of their own shares, pricing the shares even higher. So very, very, very difficult to consider this is going to continue on.
And another thing that we forget about, just 8 or 9 years ago, we had a major real estate crash, a major mortgage condition. Can that happen again? It will happen again, we just don't know when.
Well, and then in that case, the real estate and the mortgage crashes caused the stock market to crash, so it was a total implosion of 53% of most people's assets.
Yeah, the question really is not when this is going to happen, but is your portfolio prepared so that if it does happen, or indeed it will happen in many of these cases, are you going to be prepared in retirement successfully?
And that is the main question right now. Are you prepared with your current advisor, your current portfolio, to handle these types of risk if one or more of them happen at any time?
If you like this video and want to create your own retirement income plan, we've just created a brand new video that will walk you through this process. All you need to do is click the link below and we'll send that video to you.